Hi traders, good morning, good afternoon, good evening. Today we are going to discuss about an interesting topic, options iron fly. Last week we covered iron condor, so this is in continuation to that. So this is a strategy called iron fly. Before we get started, okay. Now what is an iron fly? So as you have been following my videos, we have learned about iron condor where we sell a credit spread and a put spread and we form an iron condor. Here we are going to sell an at the money straddle, which is this peak, you can see this. So when you write an at the money straddle and hedge it on the both sides, like you buy a call and you buy a put, this becomes an iron fly. This is a very simple terminology which I'm trying to explain. And the width what you choose between the strikes, like if you go one strike above or one strike below or two strike above or two strike below, that is your definition of profit and risk. So this is a very interesting strategy and a very limited risk and good profit strategy, and you can easily apply this on any given day, and once you get the direction you can change it to a directional iron fly. So before going to the rules, let's get onto the chart and see in actuality how it works. So let's look at NSE Nifty chain and see where is the market. For expiry date 31st October, the market is at 11,550. So this is our at the money strategy, 11,550. We try to do it on 11,550 and choose one strike below, which is 11,650, and one strike above 11,450 put. So we are going to use Capital Mind this time, and to save the time, I have already done this here. So let's see how it works. So here you're getting a maximum profit of 6,143. That is when the market remains, when the Nifty remains in this range. So this is the profit you're going to get, 6,143. If the Nifty starts moving anywhere closer to your call side, which is 11,630, so this is the break even point. If it reaches 11,632, then you have to make an adjustment. So how do we make an adjustment? We, as you can see, we have sold a 650 550 call and 550 put, and we have bought one 11,650 call, 11,450 put. Now say the market is moving in this direction and it is going to cross our 11,632 mark, which is our break even. So what do? We just change this to we close this profit leg and we try and buy another 11,600 call. So your iron fly will change into this fashion, where market goes anywhere above this break even point, you will be always in this 761 rupees profit. Peak profit will be when the market will be in this direction. So your net credit or net profit is 4,511 and max loss is about 2,981. So this is the way you can adjust if the market turns around, and the same can be done on the other side as well. So this is a very simple strategy, and you can do this on an intraday basis and you can see the success. You can also do this on a call side, on a put side. Let me show you how to do that. So let's go to NSE chain and assume that we just want to write it on the call side, say 11,550 call, 450 call and 650 call. So what do? 550 call we are going to sell 2 lots. 450 call we are going to buy 1 lot. 650 call we are going to buy 1 lot. So this is how the condor will look. And here maximum profit is about 6,623, max loss is about 877. Guys, so this is an excellent risk to reward strategy. For risking 877 rupees, you're gaining a maximum profit of 6,623. But the market has to remain in this range. So in this case, if you want to adjust, if it starts going this side, what you do is you do the same thing what we have learned just now. We roll up the winning side, and here it goes. Anywhere the market goes above, you get a profit about 1241 rupees. Your max profit is about 4991, max losses minus 2501. But before you change the leg, you have already booked some profit, so your profit will be higher when you make an adjustment. So this is fairly simple, guys. If you work with these kind of strategies on a daily basis, your success rate will be much higher, and the confidence levels will be much higher. Instead of going and searching for different strategies and getting confused what to do when the market starts, these kind of strategies will help you to structure your trading and help you to understand the logics and maths behind it. And it is very easy to execute, and you don't have to do much when the market, every candle you don't have to react. You have certain break-even points. If the break-even points are breached, then only you're going to make some adjustment to it. So overall, you know how much will be your loss for that day if your view goes wrong completely. So you're going to book that loss and get over with it and try for a next trade or next day. So there is always a next day in the market, so you don't have to worry. So now let's get back to the rules what we have to follow. These are very simple rules. First, you have to form a view in the market. If the market is range bound, you have to start doing that. Just a second, guys, you have to ignore this. So the view on the market is range bound. Then you can choose to start with this strategy, and then as per the direction of the market you can make the adjustments. And always choose at the money strikes for maximum credit, and choose the width between the strikes as per the ATR. Say example, Nifty has a moving range of about 100-120 points on a daily basis. You can choose 150 as your ATR, and then choose the strikes like that. And always adjust by rolling the leg in profit. Never touch the losing leg, that has to be left like that, and adjust on the profit side. You always have to book profits first in options. You don't touch the leg which is making the loss, and no stop loss required here. You can be rest assured that nobody is going to hunt your stop losses. And this strategy, you know how much maximum loss you're going to make. You have fixed it and you have seen it, so you'll be more confident, and your trading becomes much easier if you follow these kind of strategies. And this works very well. Iron condors and iron flies on expiry days, it can do wonders for you. You don't have to sit and watch the market. You have to define a range and write an iron fly or write an iron condor, and make an adjustment only if the market moves against you or touches any of your break-even points. So then you have to adjust, roll up your profit side, book the profit side, and roll up to the different leg. This you can try it on stock options as well, but the capital requirements will be higher. And that's it, guys. That's it for this week, and happy Diwali to all of you, and have a great weekend ahead. And do subscribe to my channel, and thanks for motivating me. And I will try to give you the best of the knowledge which I have in terms of trading, psychology, options, and how do you manage risk, all this. So thank you so much for watching, guys. Have a great day.